Jeff, welcome back.
Great to be back.
Summer holidays are over.
Thank God.
don't think it felt like holidays given everything that's going on, but still, lots to talk about. We could start with, there's a lot, but we definitely need to touch upon the fact that the market continues to remain extremely bearish, yet there are no signs in the physical market. And I just got back from Asia, from APEC. Everyone in the East is like, where is this glut? Where is the oil? Then, of course, we've had the IEA recently release their report about how decline rates, which I know you've been talking about for a while, and I have been, and we've been the only two people who keep banging on about this. Actually, decline rates are higher than what they were initially thinking. We know OPEC spare capacity is probably a bigger topic than the market realized, because OPEC is increasing production, quote unquote, but the exports aren't really showing up. Chinese SPR buying, and last but not the least, all the geopolitical tensions bubbling around. Russia, Iran, Venezuela. There's a whole host of things to talk about. I think let's start with oil, right? I remember the last one we talked about in terms of the oil balances specifically. You kept saying that I just don't agree with this narrative, right? That I just don't see why this has to kind of collapse. And we've been saying in our research, we keep highlighting that, look, yes, the bills are material going forward if these OPEC volumes materialize, but these OPEC volumes haven't been coming, right? Have you seen a change in the last few months with the summer lull that people have stepped back and been like, actually, the market continues to remain backwardated, the bills aren't showing up? I at least will say every single person I speak to is even more convicted that these bills are coming.
Yeah. What I find so surprising is the level of conviction on something they have never seen, which is the spare capacity that's going to create that massive surplus. And there's no evidence of it. I think I'm going to just give you the numbers you gave me last week, which I used on Bloomberg recently, was overall OPEC production announcements. There are 2.5 million barrels per day increase. Exports are up 900,000 barrels a day. That is what we're missing, 1.6 million barrels per day. Of that 900, 500 to 600 of it's Saudi, 200 to 300 of it's UAE, and then a smidgen from like Kuwait. That's core OPEC. Nobody else has increased production. And, I like the saying of Warren Buffett's, when the tide goes out, you find out who's swimming naked. Here, swimming naked is not having spare capacity. And I think it's pretty clear. Russia, Ukraine takes constant hits at Russia. They'd be lucky, they're not increasing production. And if anything, it's going to likely start going down. U.S., the unemployment rate in Texas is spiking. It was in the unemployment claims last week. They're down 3,000 jobs in the oil patch. They're not increasing production. So right there, you look at your two largest oil producers, they're likely going to start declining because they're not investing. And I don't have to go to the rest of non-OPEC. So I really struggle where these inventory builds are going to come from. And, the demand numbers were revised up 770,000 barrels per day. IEA says decline rates are setting in. The bottom line, you look at this market, even going back to 2022, it hasn't built inventories. It's remained backwardated. Demand has remained far more robust than what anybody has thought, and investment's not there. So, the evidence supports the bullish narrative, and the bearish narrative is based upon, assumptions that have never been tested. So the part of it that I just simply do not understand is why that conviction. I think, why is the conviction? Because the price won't move. Why doesn't the price move? If you're an investor and you haven't been invested in tech, you're in trouble. You are massively underweight. So the bottom line is people get longer and longer 10 stocks that some of them are worth $4 trillion, and they have to be longer. If they aren't long, they're in trouble. And eventually they're going to be in trouble. And, you look at, since we last talked, I was really bullish oil, and all the other commodities have moved. Record highs on gold, copper just topped 10,000. What do I think is going to kill off the hyperscalers? It's going to be lack of investment in the grid and copper. Yeah. And when they go down, that's when you're going to want to be long oil. And the question is, when do they hit a wall? The survey showed 92% of the hyperscalers say what's their number one issue, why they can't hit their targets? Access to grid. So I think we're going to get there. And I do think the physical world will take down the hyperscalers. And when you take them down, then you're going to get the rotation back into our space. And oh my God, they're underweight. If I was bullish a year ago, I am in much more bullish. And I don't think people have any fathom how high this is going to go. They have been reducing their positions now for 2.5, 3 years. So right now, you look at the S&P 500, energy's 3% of the index. It's one of the most important industries out there. I mean, I think it's real estate and utilities, the only ones that are lower, like 2.5, and even utilities are important. So if you see that rotation occur, investors are going to be scrambling for any exposure they possibly can get. I think that the case is overwhelmingly on the bullish side, and I always like to take the contrarian view in a market that's particularly short right now.
I think for me, what really stands out to your point is that conviction, even though it's been proven wrong for 9 months, right? And yet, it is coming. And it's so universal, this view, right? That's what scares me. And I mean, again, we know this very well, that there is a reason why OPEC and particularly Prince Abdulaziz is so confident in terms of this unwind, because in some ways, my interpretation of a lot of this is that, okay, show me where the spare capacity is, right? And I think he is going to be proven right significantly in terms of just how the rest of the players are kind of coming out without really having any barrels. And it then becomes and begs the question, you were at the heart of that 2004 to 2008 bull rally. You were the one calling for those significant price increases at that point. I also feel a lot of people in today's market, they weren't there at that point. I feel old saying this, by the way.
Yes.
And I was like, I just started my career around 2008, but I remember that, and I was reading up a lot about that. And I think when I highlight the fact that, yes, we've come off $15 in a backwardated market, one of the steepest backwardations we've seen. And then people are like, we're going to go into contango, and therefore the front's going to go down to $40. I'm like, if we get into contango, sure, Q1 balances do look weak. We can get into some physical contango. But the other thing is the back end of the curve is probably going to go bid, which is exactly what happened like 2 decades ago. And then the whole curve moves up. So you can be in a contango market, but a higher flat price.
Yep. And I remember, making that call in 2000. We were right for all the wrong reasons. It wasn't bullish. It was really bearish.
It was really bearish, yes, of course.
And the back end went up. I remember when it first started moving in 04, 05, we just went from 20 to like 35 and then 35 to 50. But here's the thing that I think that going back to why people have a conviction is the prices remain low and they don't know why. It's a lack of liquidity. Dollar's super strong. This is identical to 01, 02. And I remember right on the eve of it was December 31st, 2001 going into 02. And that's when China was admitted to the WTO. And that's when the game started. The dollar was trading 0.87 against the euro. You had oil backwardated sitting at, something like, I can't remember where it was. Actually, if it was 01, it was probably somewhere around $18, $19 a barrel backwardated. And we were bullish based upon, China and all this other stuff. But the reality is then OPEC stepped on the accelerator, brought on that supply, it flipped into contango, and then the back end and all liquidity on it drove it up. I think we're in identically the same position there.
Which is why I wanted you to almost tell the audience what happened then, because I genuinely think people don't remember or weren't there.
February 02, we published the piece, The Revenge of the Old Economy. And we were making this simple observation just like now. And it was, the new economy was, it was screaming going in, toward the middle of 01. By the way, it was already cracked by the time we wrote that piece. But it was the exact same dynamic. You'd sucked all the capital out of the world into all of those .com stocks that were, in Silicon Valley. And eventually, they didn't have the profits to maintain it. By the way, it's identical today because instead of data centers, it was broadband and telecom. Yeah, it was, and everybody wanted Calpine. Actually, was the darling, like Constellation is today, and Vistra is today. So it was the exact same setup. You wanted to own the power. The power is going to go into the internet. The internet's going to change the world. We want to own broadband. By the way, we're just now exhausting all that spare capacity that was built over that time period. And even Sam Altman is talking about, we're overbuilding this stuff.
Yeah.
And you're going to pressure the system. But, gas was the focus. And I think I was telling this last time. I put on my gas hat. I didn't want to do oil. And,
now you've come back.
Yeah, I've come back back then. But I think, the setup is identically the same. I don't know this time if we do go into contango, because you got to go. But at least then, you had a massive amount of spare capacity still in Saudi Arabia, and Iraq was able to come online. That flipped you into that contango, and then the demand growth was the highest ever recorded in '04. China went up like 3.1 or 3.2 million barrels per day, literally in 1 year, and that's when OPEC brought it all online, and then you're out. By the way, then the market got really bearish in '06, '07. Inventories built. And then you go into '07, '08. And, I know Prince Abdulaziz, he was a deputy minister in '07, '08. Naimi was shocked. He brought on all the spare capacity in '07, '08. And then the market proceeded to go up $50 a barrel, because it's a fine line between oil surplus and running out of capacity. I don't do the balances anymore like you, so I don't have a fine idea about it. I hear you on the inventory bills, but we're into this, and we still haven't seen the inventory bills. They revise demand up, revise supply down. We may be in a double whammy here where, hey, you're out of spare capacity, you're out of inventory. And the other thing that makes this even more different than any other point in time is you always had some big producer that had sanctions on it. You don't have them anymore. Venezuela's in the market, Iran's in the market, Russia's in the market, anything, those three are going to go down. U.S. has exhausted its SPR, so the insurance policies are out. China's the only one that's actually concerned about this, building SPRs. They've got their insurance policy. They're ready to rock and roll if things get into it. But the West, I don't understand what they have done. They've put themselves in a very precarious situation right now. And I think that's the one thing that's different. So I hear you on the inventory builds and going up in a contango, and we went down in a backwardation. But I think if there's anything, why is the market wrong? And I think it's the same situation in '01, '02, is you had to be overweight the hyperscale. You have to be overweight tech right now, or you got a problem. And everybody I talk to go, why don't you want to buy this stuff? It's because, I hear you, but it doesn't work. And if it doesn't work, here the other thing too, I've really begun to learn in my 30 years of doing this, nobody has to buy a financial product. They have to buy oil, they have to buy this. You can sit there and do the fundamentals all day long. Nobody's going to force you to buy this stuff. Yeah. And you don't have to buy it until you're really underweight and you got a problem. So right now, if you're not long tech, you got a problem. You're underperforming. If you're not long energy, you haven't had a problem for a decade.
So why change?
Why change? Yeah. And they're not going to change until they have to.
But I think so. No, I agree. I mean, you could easily get a situation, especially now, right? If Russia, we lose more barrels, or any of these countries, we won't get that contango because we'll just absorb it. But do you at least get the sense that back end of the curve has to get a bit? Because we've talked about spare capacity, probably worth us talking about non-OPEC supply, because we talked about this last time as well. After 26, really from that mid-27 onwards, there isn't a project database of new supply. The bulk of, and we have a great chart, which I'll probably show at the conference in terms of how much supply is coming online this year, because it's both OPEC and non-OPEC. But after that, it's flat. Yep. Right? So in terms of your double whammy, it could be triple, because then you also realize, hang on, there's no new incremental non-OPEC either.
Right. Yep. There's nothing out there. There's no insurance policy whatsoever.
And then let's talk about the IEA's just released report about higher decline rates, right? Yeah. Like, that's my worry, that yes, we're focused on these bills are coming, but then just 12 to 18 months out,
you got a problem.
Yeah.
But here's my question. Who's going to buy the back end?
That's why I'm asking you, like, do we sense some of these long-term investors are starting to get interested, or not yet?
There's nobody left that knows anything about this to go out and do that. So, it's like, so, I mean, the reality is, and anybody who knows anything about oil, that understands the cycles of it, they've all left. They've
Yeah.
gone and done other things, just like, now with the, in the oil patch, you get rid of all of these drillers and where are you going to find them? There's nobody left. You're going to have to retrain everybody, bring them back, and somebody who knows it. And most people who trade these markets, they don't know they don't, I'm like, you ain't seen nothing yet until you see what happens to this tech bubble when it bursts. Even Sam Altman's like going, it's a bubble. And I think the people were shell shocked on Liberation Day that market could go down that much that fast.
Yeah.
Okay. And I go, well, that's, you lived through 01, 02. I remember in Goldman walking around on those tech floors, they were vacant. And it was scary. And I don't think the world is ready for what it's going to be in for. Because the only way you can go, hey, I'm going to buy that back in, you got to take down that tech story. And taking that tech story down is going to be a painful process. And by the way, oil and commodities they always get hit in this thing. So the initial process is going to be violent. But then the capital has to find a new home. It's not quite a zero-sum game, but it's pretty close to it. So you're going to have all this capital going, where do we go next? And the obvious place to go is going to be energy. I just don't find me another sector that's going to have as attractive fundamentals when tech ends its game here. And so when you move on to the next, and by the way, I think, copper mining, it's the whole space. It is the same revenge of the old economy story here. And, but I think it has to start with creating the investor that buy the back end. And right now, the money's parked in tech. And by the way, it's rightfully parked in there. I don't know when it's going to end. My guess is they're going to keep missing their targets because of grid access or cost of copper and whatever it might be, transformers. And eventually people go, this is not happening.
It might be 12 months, but in some ways it coincides perfectly with the most bullish part for oil, which is kind of a year or so out, given the lack of spare capacity, lack of non-OPEC supply. So but you're right. I think the initial bit things might get worse first before it gets better. But I just worry that when the liquidity comes, the move up is just going to be exponential potentially.
Oh, I do. I agree. I think, I don't, everybody say, oh, you're too bullish, but right now I don't think I've ever been, this is a once in a generation type opportunity here because we have ignored the space. It's worse than, actually, here's a stat I like to say. In 1999, 2000, as we went in there, we had a stat we would say is that U.S. E&Ps destroyed 72 cents on every dollar. Excuse me, they destroyed 28 cents on every dollar. So they only could enter 72 on each dollar is what they earned. This time around, they destroyed 54 cents on every dollar. So it's way worse than what we did in that 1990s. Yeah. So you have less investment there. Oh, and the other thing I like to point out too, the hyperscalers are doing identically the same thing as what the shale guys did when they destroyed all that money.
That's very true.
They're spending, I think they're at one point, the shale guys peaked out at 1.5 times earnings on what they were spending, way more. The hyperscalers are around 1.3 right now. So it's just like, you guys, we've seen this story again. It doesn't end very well. And so, they're spending and they keep funding and they create stories about why this makes sense. And then everybody tells me energy's a bad investment. We got killed in 14, 15. Yeah, they were spending 1.5 times earnings.
Now they're not.
Exactly. So I think, the setup here is far better than what it was in the 2000s. Now, the part that's missing is you don't have China having that big demand impetus. But then I can go, okay, like I've talked before, is, all right, Europe has got to go out and now, we can talk Poland and Qatar and all that. The Europeans, they got to spend enormous amounts on defense, and it looks like they're going to do it. And that stuff requires a lot of commodities, energy infrastructure, and it's going to be a diversification of oil, refining, renewables, it's everything, nukes. And so I tend to think you're going to get, you got the makings of the big CapEx boom like the 2000s with Europe sitting at the center. Yeah. But I don't think it won't be as explosive. You're not going to get, I'm not going to say it won't happen, but you're not going to get a 3.4 million barrel per day demand increase like what you got in 2004.
No. And I really think this is probably going to be even more supply driven than demand driven, right? Because of the confluence of factors. But your point, good segue into the geopolitics, right? I mean, right now, like you said, Vens in the market, Iran exporting anywhere between 1.5 to 1.7. Russia, they're exporting everything they can, right?
Yeah.
They're only bound by OPEC plus quotas. And by the way, they're overachieving on that because they can't produce.
Yeah, they can't produce.
So this is also where I find, and I will say the market is bearish, but probably not as short as it could be, because people are just very worried that, okay, any of these geopolitical events could happen. But the volumes we're talking about are huge. That could be lost, right?
Yeah.
And even if you assume China continues to buy it, even right now, India and the US are in trade talks and they're saying, okay, you do need to reduce Russian imports. So where do you see all of this playing out?
I don't see China or India reducing their Russian exports. If anything, actually this morning, India is up observing Russian military equipment on the border, and so on the Ukrainian border, which is telling you that the Americans are pushing the Indians away. And when you look at, if you do take China and you do Russia, Iran, and Venezuela, and you put those three together, China is basically energy independent. So by creating these sanctioned entities that China is siphoning out, China, you're just making China. Does China want this war to end? Absolutely not. Is U.S. going to do anything to end these? Clearly, Poland, Russia sent drones into Poland, and what was Trump's? It looks like an accident. They're not going to do anything, and I don't think it's in anyone's interest to do anything besides Europe.
Yeah.
Europe's got a problem, which I'm going to go back. Europe's going to spend a lot of money on defense because they got to take matters into their own hands. They've had 75 years to figure this out, and they're getting cut off. It's time to grow up and take care of yourself. And I think that we're talking, to give you the idea of the numbers, and I think I talked about it last time, China was a $10 trillion investment boom between 2002 and 2012. Put that in today's terms, it's 15 trillion. Worst case scenario, I'm going to put it in dollars, is the European military boom is 5 trillion on the bottom and potentially 14, 15 trillion on the top. So it's on the scale of China. If they really did it. And by the way, every day we go through this, it looks more and more like Europe's going to have to move closer to the 14, 15 trillion. It's 14 trillion euros.
And kind of what Trump wants, right? He's basically now saying, if you do it, I will join you. Yeah. I mean, whether he does it or not, that's a different story, but that's kind of his ask.
Yeah. And I'm not an expert in geopolitics, but you take that Monroe Doctrine, and he's sure acting like it's Monroe Doctrine. Deal with your own home and ignore what's happening in the rest of the world. And the fact that there's skirmishes going on in places like Venezuela, and the Chinese are there. Is that something that could flare up? But I think you go into your point is, we're not going to wake up tomorrow and have all this Russian and Iranian oil. I don't know where that's going to come from. So again, I just don't know where the conviction. Your odds of waking up tomorrow morning with Russian oil, something happening there, I think are much higher than mysteriously getting more oil. So I'm baffled by how even the geopolitics are playing out here. So I think it just reinforces the upside.
Yeah, especially now Ukraine is explicitly actually talking about the fact that this is the best way to damage Russian revenues.
Yes.
And they've been extremely successful this time around. 13 refinery attacks in August, 5 already in September, and it's probably only going to go up.
By the way, I have a question for you. Biden would call up Zelensky every time he would take a hit at one of those refineries. Stop it. And Trump is equally concerned about inflation through oil prices. Why isn't Trump calling him up and doing the same thing?
I mean, the best thing I heard yesterday, and it's quite funny, saying, Trump must know Q4 balances are going to be very weak. And I did start laughing, saying that I don't think Trump follows oil balances. But I get the sense, and our geopolitical team have been kind of saying that Trump definitely wants some form of a deal, right? He likes the big headlines. He doesn't really want to sanction Russia because I think he just doesn't believe it's going to work.
Yeah.
But at the same time, he probably has given Zelensky a bit of free rein. One of the things is if crude prices were to start going up, because we've still been extremely range bound, right? We're still between 65 and 70 for Brent. And yes, again, diesel's going up, gasoline's going up, and I don't think that's necessarily on Trump's radar. I have a feeling if crude jumped $10, he would probably make that call, right? Right now, we're still pretty, like for him, remember just not that long ago, he said $64 WTI is a good price.
Yeah.
For whatever reason. And we're kind of there, right?
Yeah.
So I think that's why he hasn't picked up the phone. I think if prices went up, say, Brent towards 80 and TI above 75, he probably would make that call.
Yeah.
Also, a big part of what he's driving now at is we need to cut rates.
By the way, on the damage that Ukraine has done to Russia, J.P. Morgan put it at like 500,000, and another one put it at something like 1.5. Where do you put the damage on refining right now?
Capacity is more; it's like 1.5, etc. But the actual loss in runs is about 1 million barrels per day, give or take. Now, obviously, some are coming back as the damage is limited. Some damages are much bigger. I think for me, the biggest thing the market is missing, and to state the obvious, Russia is actually a really big country. The transit times take long. So a lot of people were like, oh, refineries were hit. Oh, we're not seeing it. We're not seeing it. And our products team are about to put out something tomorrow, the monthly distillates piece. And there's a chart in there that shows this month tracking the lowest diesel exports out of Russia in over 5 years.
Wow.
So I think that's the issue, because so much of the oil, or whether it be crude, whether it be diesel, is already in the pipeline in transit or on rail cars in transit. So there is a good 1 month lag between when the refineries are getting hit.
Yeah.
And our conversations, one of the very interesting revelations is some of these refineries can't even reroute this crude.
No,
they just have to shut in.
Yes.
So I genuinely think the worst is about to
happen. Yeah. No, I'm right there with you on that. By the way, on the point about Trump knowing where the balance is, one thing that I spend a lot of time now with people who are not close to the market, where I used to be like you, talking to everybody that close, is you can take people that trade commodities and that are, and they all they hear about is surplus, and they really think it's shale. Like the common view is shale is just this screaming increase, thanks to our friend Javier Blas talking about all of that increase coming. I think what you have a consensus view out there that shale is the savior. And I bet even Trump believes that. And I think because the vast majority of your average investor is under the view there's a huge surplus that's coming, and it's going to be driven by U.S. shale. That is the non-specialist
view
narrative.
But do you think then the IEA's report, which they finally say, okay, decline rates are 8% instead of 3%, does that change the narrative then?
Because it's just the word decline rate's too difficult for a non-specialist to even absorb. They don't understand it, and it's too. So that report went viral in our world.
Yeah.
But to anybody outside of us, no, it's just nobody paid attention, and nobody will pay attention until the price moves.
Yeah.
It goes back to that point. The one thing that I have learned in all this is we can be as bullish as you want.
But the price has to do the work.
Price has to do the work, and then people go, oh, something's going on.
Yeah.
And so at this point right now, you look at the tech, it's costing you every day if you aren't long.
So good segue. We've got our conference coming up 29th, 30th of September.
Looking forward to it.
You're going to be there. You're one of our key speakers. And we've got quite a few CEOs coming, not just from majors, but the shale patch. And I've been having conversations with them in the lead up to it, talking about what we're going to talk about. And they are amazed. They say the same thing. They're just saying, we don't understand how people think we're going to squeeze any more out of this. We are doing what we can. And they're like, $65 WTI is just not good enough anymore. So I think we'll hear a lot from them. We've got the Deputy Energy Secretary coming from the US as well. So that'll be an interesting one in terms of seeing what that headline talks he wants to give. But we've got some OPEC ministers and we'll see. I think it just kind of ends up being, the timing will be super crucial because it's still a little, like a few days these days with what's going on in Russia. can really, really change that dynamic.
Yeah, I know you say the fundamental balances starts to shift, let's call it
Q1-ish,
of next year. But the reality is, once this market moves and some fear gets into this thing's going to move and move quickly. It'll always move well before what we think, And I think you start seeing Russia get really tight, and there's closet bulls out there. They call me. They go, I need to have I need some strength to get long this thing.
Yeah.
By the way, I would be, I'm personally, because then I can trade this stuff now. I'm long. There's like your cost benefit ratio right now of being long versus being
short at these levels.
It's just, we know you're digging into the cost curve. Employment's going down in Texas right now. Your risk reward, just back up the truck and buy this stuff, and buy it back in, buy anything you can get your hands on. Because the other thing too, whether if it's the companies or the markets themselves, there's just not enough capacity for the financial markets. Once they go, hey, I need some exposure to this stuff, there's nothing there.
Yeah. And I think what might end up happening, and I'll close with this, is that we are going into the conference allegedly in the most bearish ever oil market balances outside of COVID, right?
Yeah.
Deep down, my gut says we'll probably come out of it. Everybody's going to be like, no, this is actually really bullish.
Yeah. I agree with that.
Yeah. We'll see. But I just have a feeling, talking to the speakers, talking to a few who are coming, like you said, there's a few closet bulls. They don't want to come out and say it. But I think more and more of the data that's coming out just kind of suggests that glut that everybody's talking about is just not there.
No, it's not.
Thanks, Jeff.
Great.
As always,
it was a pleasure to be here. Thank you.
And see you in a couple of days.
Excellent. Looking forward to it.